Stock Charts Live. We're going to be talking about Apple's earnings. We're going to be talking about Amazon's earnings. We're going to talk about the weekly charts. We have a lot to go over. We have headlines to go over. They passed that monstrosity of a stimulus bill in the Senate. I think it's got to be negotiated with the House. They're going to pass it. What else we need to talk about? We're going to talk about the NASDAQ futures. How does the NASDAQ like the earnings reports? We're also going to talk about an earnings report nobody really wants to talk about, but it's pretty significant nonetheless. Not as significant as it once was, but still an interesting read. We're going to talk about, if I didn't say it, the weekly charts and the Fed's balance sheet. Did they reduce their balance sheet as promised? We'll take a look. All right, so what I really need to begin here with is a bit of a shout out as people populate in, they get themselves a nice beer. So first, what we want to do is we want to give a shout out to our sponsor over at TrendSpider. Folks, if you're not using TrendSpider, you're missing an arrow in your quiver. You should be using it because it allows you to automate your grunt work. They just came out with some insane functionality. I just saw it earlier. You're able to back test, create bots. It's insane what they're doing right now. So automate your grunt work, speed up your technical analysis, and improve your accuracy at the same time. How do you speed up your analysis? You use automated support and resistance levels. How do you improve your accuracy and reduce costly analytical mistakes? Well, you use their alerts, fine-witting chart setups with their scanners. They're pre-built. I never built one of these. They have dozens of them in there. I didn't build one. I steal them. You're allowed to steal them. You rename it, you make it your own. Time your trades with precision, again, with their alert system. So they have a great mobile app. Take advantage of the 35% discount code below. Go over to their website, explore their product. The link is below. They have, here's the new thing, trading bots. It's insane. Every time I come on here, there's something new. Seasonality, one of my favorite things to use, seasonality. You can see how a stock is doing seasonally on a weekly basis. What's the best week out of the year? What's the best day out of the year? What's the best month to own or not to own a stock? What else do we have here? In short, folks, go over, watch their tutorials. They have a great support system, 35% discount code below. Let's get started with the after hours price action on Apple. Okay, so the anticipated market maker move again was $5.60, and we closed at $157. We're about there. We're right within the tolerances of the anticipated market maker's move. Did I trade Apple? No, I did not. The implied volatility on Apple was just ridiculously low for an earnings, 31%. No way am I going to trade a binary event, meaning a potential time bomb up or down on a stock when you have an IV percentile of 31%. You're just not going to get paid to take the risk. And we don't buy or short stocks into earnings. So there was no trade to be had here. Far too much risk, not enough reward. That's the key to selling premium. You got to know when to walk away. If you get greedy, you're going to get your face ripped off, just like we would have done had we traded Amazon. Now, Amazon, their earnings were gangbusters driven by AWS, Amazon Web Services. Their margins on their fulfillment business is very, very small. It's Amazon Web Services, their cloud business. That's all good stuff. Now, the anticipated market maker move here, I was all prepared to trade this one, was $7.14. We normally would double that, and right now we would be underwater on this trade. We were going to use a price target of 135, 136, I think it was. We're at 138. I didn't execute on the trade. Why? I just wasn't going to get paid for the risk. So we would be underwater on this trade, assuming that we're going to open up where we're trading right now, which in all probability we're going to do, given the fact that the NASDAQ in the after hours session, assuming that this holds up, and we have a lot of earnings, not earnings, we have a lot of economic data coming out tomorrow. We're up, uh, we were up 1.25%. We were up nearly 1.5% earlier. We've given up some here. VIX looks like it may be bottoming out. So we're going to keep a close eye on this, but I think we're going to get a strong open tomorrow. But we're getting a couple of warning flags here in the after hours session. Keep in mind, this is light volume. All right. So the earnings report that people really don't want to talk about is this one, Intel. The anticipated market maker move here was what, about 250, 266. This thing's getting annihilated in the after hours session. Those who would have traded options on this would have their head ripped off right now. You could not have gotten further away from the closing price to make a dime on this. So what was the anticipated? Not the anticipated, the IV percentile. It was pretty big. But I still don't think you would have gotten paid enough to take this risk. So Intel reported very, very bad Q3 guidance. They're reporting guidance of 15 to 16 billion. The consensus was for 18.7 billion. So forward-looking guidance not looking good at all. Now, Intel is not the bellwether it used to be at one point in time, going back 10, 15 years ago. If this would have happened, you would see the NASDAQ deep, deep red right now. But times have changed, and they are just not as influential as they once were. So I'm anticipating a continuation move here. Might we pause on poor economic data tomorrow? Maybe. We'll definitely pause on strong economic data. I'll tell you that right now, because we're going to go to the psychology of the market. And I don't know if Yoga Mac is on yet, but he knows. I didn't share my screen. Ugh. I can't believe I did that. Sorry, guys. I don't want to start over again. I apologize from the bottom of my heart. That's my artistic side failing me. I need a producer. If anybody out there is in the production business, please let me know. Submit your resume. You could do it through LinkedIn. You could just send it into the chat box. Let's say hello to people. Trader Isaac, good evening, gang. Has wheat put in a new bottom? We'll check it out. I haven't looked at it. We stopped out today of our. We made money. Cal-Maine Foods that broke support. Looks like in a weekly time frame we may have a double top there. So we booked profits. It's a food stock. The DBA, the Food Agriculture ETF, has been higher these past couple of days. We'll take a look at wheat. That's an interesting trade to look at. Talon, hey, brother. I have been using the cloud on TrendSpider. Really? What do you mean? They're on the cloud? I don't understand that. Can you let me know a little bit more about that? I don't know everything about them. They come out with so many new features. I can't keep up. Hey, Bob, don't mean to sound desperate, but I have a short in Teledoc and I'm down 8,000. Will it move lower? You think I should bail? Okay, so we'll take a look at the chart, Falcon, but as a percentage of your portfolio, I don't know what that is, right? So I'll give you a buy, sell, hold opinion, but as a percentage of your overall wealth, I don't know what that makes up. So I can't give you advice. It wouldn't be fair. It's not right. So I'll give you my opinion on the stock. Hello, Bob. You are not. Thank you. Yeah. A little bit embarrassing. A little bit embarrassing. Okay. So real quick again, we're going to go back through. We're going to talk a little bit about, yet again, before we leave here, Intel getting hammered after hours. The anticipated market maker move was $2.66, and we are beyond that now. So anybody that was selling volatility here, short, is probably getting burned on the put side of that trade, assuming they were using a strangle. And God forbid they took a directional bet. They're really getting burned to the short side. What else? Amazon surging after hours. Now, Amazon is going to become a short for swing trade very, very soon. If I remember later on, even if I don't remember later on, somebody remind me to go with a weekly chart of Amazon. The same holds true for CMG, Chipotle Mexican Grill. We're going to be looking at the weekly charts. Why? Because there's a tremendous amount of overhead supply above. I like to call them dead bodies. These are people that want to get made whole. They are zombies. They have been hammered over their head. All they want is their money back. So the minute that their screen lights up from red to green on any one position, they are out. They will sell. So while Amazon's looking great after hours, and I would have had my head handed to me if I would have taken that low premium on the trade, there is going to be a short setting up here. I don't know if it's going to be tomorrow. It may be next week, but there is a short setting up here very, very soon. But I don't mean for the long term. I think it's going to be a very short-term swing trade, and I would be out of it very, very quickly. We may just sell naked calls. What else do we want to talk about? Recap on Apple, because I was so flagrant in my violation of my screen sharing rules that I need to do this yet again. Apple, very strong price performance in the after-hours session. We did not trade earnings here. Why? If you're not going to get paid appropriately to take the risk, this is an undefined risk that we were taking on here. You got to walk. You got to step back, walk away, live to play another day. So I'm feeling very, very good right now. If I would have taken that low bid on Amazon, I would be kicking myself right now. So sometimes you just got to walk. Okay. Let's go to the futures. I want to see if we are still continuing to pull back here. No, we regained momentum here on the NASDAQ. VIX is still stable, though. Okay. Let's talk about economic data, folks. Now, we'll talk about tomorrow first, and I guess we'll come back to this page for a reason, because one of the top questions I'm asked, usually on these live streams, is, do I think that we have seen the lows of this bear market? No, I do not. One of its primary reasons why I do not think that we've seen the lows is that we have incompetent management. Incompetent on the Republican side, in my opinion, far more so on the Democratic side. We could agree, we could disagree, it doesn't matter. But when you have an administration that is literally changing the definition of woman, recession to fit their agenda, that's an illegitimate regime. All right. There's something wrong. It's an incompetent management. Yet on the Republican side, I think they're worse because they are they're managed competition, right? They're competition to the Democrats, but they're under control. They're not really a problem. They're not a threat. So hopefully that'll change soon. So the reason why I'm going to the reason why I'm bringing this up is because this recession thing came up, and it's just too stupid to be stupid what they want you to believe. And the mainstream media is playing along with it. It's so disgusting. So tomorrow we're going to get the PCE inflation index. This is the Fed's favorite number, not the core CPI, not the headline CPI, but the PCE. Disposable income comes out tomorrow. If it comes out weak, watch out for the retailers. Consumer spending, again, watch out for the retailers. Employment cost index, that's big. That's inflationary. Chicago PMI, UMich sentiment survey, very, very important. So big day tomorrow. Most of this stuff spreads out from 8:30 a.m. to 10 a.m. ending. So really quick, let's take a look at the incompetence. Watch Washington Reporter exposes White House blatant redefining of recession. They must have taken the video down because it was on here this morning when I watched it, but yet they've removed it. But I found it on Dave Rubin's channel. Shout out to Dave Rubin.
If things are going so great, though, then why is it the White House officials are trying to redefine recession?
No, we're not redefining recession.
If we all understand a recession to be 2 consecutive quarters of negative GDP growth in a row, and then you have White House officials come up here to say, no, that's not what a recession is. It's something else. How is that not redefining recession?
Because that's not the definition. That is not the definition.
Brian Deep said in 2008, of course, economists have a technical definition, which
he's quoting Clinton's lead economist. So this is a Democratic president's economic advisor defining what a recession is
of a recession, which is 2 consecutive quarters of negative growth.
I can tell you this.
He said 2 negative quarters of GDP growth is not the technical definition of a recession.
It is not. It is not.
Why did he say that?
It is not. I can speak to you to what he said yesterday in front of all of you, which is the last thing that you just repeated. There are many factors. Economic factors and indicators to consider, and I will say that the textbook definition of recession is not 2 negative quarters of GDP.
Okay, so you know.
Okay. Thank you to Dave Rubin. Great guy. He's a liberal guy, but he's liberal with common sense. I happen to like Dave Rubin. So it's too stupid to be stupid. And you would think that that CNBC would look past this, they would be intellectually honest. And it really goes to what I always say, folks. If you want to be consistently profitable in this business, don't listen to other people's opinions, meaning the mainstream media. They have an agenda. There's an agenda, and it's not aligned with yours. It's aligned with their advertisers, and their advertisers are not you. So what was the headline immediately following the announcement of today's GDP read, which was negative? We are in recession. The contrarian trader is happy to report that we are in recession. We've been saying it for weeks now. I'll show you the tool that we use. It was one simple chart to identify it. But what does CNBC have to say? This is off of their website this morning. I posted this in the forum. GDP fell 0.9% in the second quarter, the second straight decline, and a strong recession signal. A signal. They did not say that we are in recession. What are they doing? They're carrying water for an administration that is incompetent. As long as you have politicians that are incompetent like this, and the media that's supposed to be the fourth pillar of government that are they're corrupt. I think everybody can agree right now they're corrupt. You cannot trust the next action that these people are going to take. The path of least resistance, despite the earnings this week, a lot of it was bad, but you got a dead cat bounced on the left. That's why I think short term we're going up higher. Longer term, we're going lower. So how do we know? How did I know? I don't know. A month ago, I was saying we're in recession. How did I know? Well, even last week, if you went to the economic data from last week and you take a look at the U.S. services PMI, remember the United States is a service-based economy. We used to be manufacturing, no more. Our government sold us out to the Chinese. It's services now. And the expectation was a read of 53. Any number above 50 is a sign of expansion. Any number below 50 is a sign of contraction. What did we get? 47. That is contraction. We got a slight beat on manufacturing, but that wasn't enough to push us over the goalpost. You take a look at initial jobless claims. They keep saying strong labor market. Initial jobless claims has hit an 8-month high. So are we just relying upon these bits of information about the fact that we're in recession? No, it's not enough. It's these news reports or these pieces of economic data only serve to validate a larger thesis. What's that thesis? Well, when we take a look at the yield curve, and I go over this chart frequently on these live streams, I come on here and go back to a few of the live streams we've done over the past several weeks, and I've been saying, you have an inverted yield curve. The yield curve has predicted every single recession, I believe, except for one, going back to 1955. That's pretty good. That's a pretty good record. That's really, really good. And what this is saying is that this is a measurement of 2-year bonds versus 10-year bond yields. So you have 2-year bond yields paying more than 10-year bond yields. Think about it. What do you read into that? People are too afraid to lend long to the U.S. government. They want to keep their duration very, very tight because they may need the money. They don't want to lock it up at a low interest rate going out 10 years. They don't know what tomorrow is going to bring in an inflationary environment. So this is a benchmark signal of recession. This is what you rely upon, not CNBC. This is propaganda, folks. This is propaganda. We are in recession. Don't let them take parking space up in your head. All right, so what else is going on here that leads us to believe that we are in recession and that the Federal Reserve is not serious about raising rates? Well, they were supposed to start cutting the Fed's balance sheet by about 30 billion in June, July, and they were supposed to ramp it up to about 60 billion rolling off debt off their balance sheet in August. Okay. So obviously the trend is now down, right? You're putting in lower highs and lower lows. But this is a balance sheet that has gone up like a rocket ship. But it's melting like a million-year-old glacier, right? We declined last week by about $9 trillion. That is a drop in the bucket of what was supposed to be rolled off this month and June. We have come nowhere near to rolling off debt off the balance sheet. So despite all the hawkishness out of the Federal Reserve, they are not serious about fighting inflation. And I will bet you a wooden nickel that this is the last 3/4 basis point hike you're going to see in your lifetime. Why? So good old West Virginia's Senator Joe Manchin folded, folks. He folded. They are going to initiate another big round of spending. There is a Treasury Department, right? But there's nothing in the Treasury. So if you're Janet Yellen and you got to finance this new spending, and you go into the cellars of the Treasury and you look around, you see nothing but cobwebs where money should be. Well, what do? Well, you pick up the phone. You pick up the phone. You call Jay Powell. Hey, Jay, you got to start ramping up those printing presses because we're passing more spending, $1 trillion worth. Where do you think this balance sheet is going to go? It's going to go back up. Why do you think stocks are rallying today, folks? It's not what you think. Bad news is good news. Bad GDP read, we're in recession. Okay, great news. It's not because of earnings. It has to do with the fact that they know the Federal Reserve is going to have to finance this new debt. He's going to have to pull back on the rate hikes because you have the midterms coming up. People's 401k statements are coming out. They know what the last quarters look like, and they're not happy. You're going to have a lot of pressure on Jay Powell to get this stock market moving up higher into the midterms to make people feel like they're not in the poorhouse. So, yeah, the president that's out there, I don't know who's pulling his strings. I don't know. But they're taking credit for a 30-cent drop in gasoline prices, yet they're still up, what, $2, $3 a gallon from when he took office. So maybe in their head, that's good enough for them to fool the American people because they think we're all stupid. And now they're going to pressure Jay Powell to cut back on these rate hikes, get the stock market rolling. And so they have a party going into the midterm elections. Have no doubt that is exactly what they're thinking. And this is what we've been saying here for weeks now. We're in recession. They're going to rally the markets because Jay Powell is going to have to provide stimulus to get this market moving up higher again. Really quick, I wasn't going to touch upon this, but since I have it up here, EU consumer confidence crashes to record low as German CPI unexpectedly re-accelerates. Now, the reason why this is important, the CPI took a break in Germany. That's the largest economy in Europe. Now, that's what I expect to happen here in the United States, is that you're seeing a lot of retailers, their inventories were bloated. They had to cut prices. So you're seeing oil prices come in some. So you're seeing a little bit of relief at the pump. You're going to see it a little bit on home heating oil. You're going to see it at prices at Target, Walmart. Walmart was one that had big inventories along with Target. They're cutting prices. So you're going to see the CPI data come in at the headline and at the core lower for the month of July next month. What's that going to do to the stock market? Boom, through the roof. Why? Inflation's under control. The Fed's they're going to take credit. They're going to say, well, looks like we've done right here. Inflation is moderating. We don't want to get too aggressive now. We want to be data dependent, as they like to say. That's going to allow equities to rally. They're still expensive. You're going to have PE probably by the end of the week back above 30 on the Shiller PE ratio. So understand the market that we're in. We're not going to force a short because I think we're going to go lower. We're going to trade to the long side. We book profits on Cal-Maine Foods. I loved it as an investment, but you know what? It broke down. It wasn't behaving right. We're out. No, we may get back in if it behaves properly. Let's go to some comments. Z told China Joe today, yeah, they went on a 2-hour call. If you mess with fire, you're going to get burned. Yeah, I read that. Yep. I guess they will take Taiwan. They have no choice. I don't know if they can, but they really have no choice because if not now, when? I tried to short ES, or that's the ES futures, folks, if you're not familiar, all day. Now down 10K. Yeah, Truffle, I try not to short this market right now. Be careful. Be careful. You have a lot of people that have FOMO. You have shorts that have been very, very profitable in this market. They're booking profits now. Did Jay Powell just screw the economy further by his comments? Yeah. In short, they're gonna balloon up the balance sheet yet again. This is what we've been saying, folks. Ever since the dot-com bubble, we have stopped being a capitalistic system. We are now a credit-based system. The economy balloons when the money is printed. I don't make it up. All you need to look at is M2 money supply. All you need to do is look at the Fed's balance sheet. No, it's not me. It's not my opinion. It's just fact. We've offshored our manufacturing. We have 90% of our pharmaceutical ingredients for antibiotics. They're produced over in China. We're going to be at war with China. They got to repatriate that stuff. They're going to be invading Taiwan soon. We got to repatriate all that semiconductor manufacturing from Taiwan. They produce about 40% of the world's chips. That's insanity. It's insanity. So this stuff has to come home, and they're doing it under the Trump administration. They started building new factories I know in Arizona, I believe down in Texas as well, but it takes years upon years and billions upon billions of dollars to get these things up and running. So I know the one in Arizona is well on its way to completion, but this is a huge shift in supply chains. So, and this is going to take years to complete. Trader Isaac. Oh, the Ichimoku cloud indicator. Yeah. That's very, very popular over in Japan. Extremely popular. So yeah, I have played with that in the past. It's very, very good. Again, for those folks not familiar with what Trader Isaac's talking about, it is an indicator, basically a read of I don't want to misstate this. We'll bring it up later on. But it's very, very popular over in Japan. TrendSpider, 35% discount code below. Franklin, hey, brother. I missed circle back peppermint. She was a much better liar. Yeah. I think this one is out of her element. Talent. Okay, Westlaw. Larry Kudlow in 2019 said the yield curve inversion doesn't indicate recession. He said other factors needs to be considered. Yeah, Larry Kudlow, while he's a conservative, I don't agree with all conservatives. I remember back in post GFC, Great Financial Crisis. This is only a couple of months after the Great Financial Crisis really blew up. And he was on there saying, green shoots. We're seeing green shoots everywhere of growth, of economic growth. We were in recession for 2 more years. So Larry Kudlow, nice guy, but a little bit flaky. And, Westlaw, I just use the data. You show me where the yield curve going back to 1955, with the exception of one time, hasn't indicated a recession. I mean, it's simple. I'm not expressing opinion here. It's just fact. Larry Kudlow, I don't know. He was in the administration in 2019. And he was talking for his boss. And I'm not saying that's right. I like honesty, and he wasn't being honest. Clark, speaking of chips, what do you think of Intel after earnings dropped? We went over that earlier. We talked about Intel. Now they're not what they were in terms of market capitalization or as an influence on the market as they were 10, 15 years ago. With the advent of the smartphone, what really hurt their business was PC demand. So they're very, very heavily levered to the PC market. Granted, they obviously have other businesses, but that's what took them down, was their forward-looking guidance and the low demand for PCs out there. So that's what's happening with Intel. I think it's significant. I do think it's significant. Yes, we're going to go to silver and gold most definitely tonight. Seymour Rivers, hello to you, sir. Talon, Bob, you said that if we had a negative GDP print, it would be bullish for equities. You called it. Thank you for validating what I've been saying. Yeah. Bad news is good news. I don't see Yoga Mac on here. He always brings it up. Bad news is good news. If it were good news today, suppose we would have had an expanded GDP, a positive GDP print, it would have negated last quarter's negative GDP print. So we already had one foot in the bathtub. Today was the second foot, making it a recession. No matter what these morons in Washington say, no matter what these morons on TV say, we're in recession. We're not changing the definition of what a recession is here. And for those folks that are new to economics, new to trading, the historic, going back in all my years and further from my readings, the historic definition of recession is 2 sequential, back-to-back, a bit of an intended, dramatic, duplicative statement here, 2 back-to-back quarters of negative GDP. 2 back-to-back quarters of negative GDP. We got it today. We are officially in recession. They will not admit it, but that doesn't make it not the truth. Right? So they changed the definition of woman in the dictionary. They changed the definition of recession because it doesn't fit a narrative. Don't let them take parking space up in your head. Watch the charts. Don't listen to the morons on TV. All right, let's get to some weekly price action on the markets. Now, this is where I like to begin by saying one trading day left to go. We have a lot of economic data coming out tomorrow. So let's buckle up. And we've had a big move on the week. If we get strong economic data, we may get a pullback, as sick and perverse as that is. So let's begin with the bond market. Now, this is another indicator that we've been using for weeks now, if not months, to say we're in recession. We're in recession. How do we know we're in recession? The Federal Reserve jacked up the Fed funds rate by 1%. What has the bond market done since? It's gone down. It's gone down. So this is the bond market saying this is not going to work. This is not happening. This is no bueno. So this is the bond market calling BS on the Federal Reserve and the morons in Washington, D.C. and in the financial news media. The tip market. So they're going to want to lead you believe that inflation is not a problem anymore. It's coming down. Don't worry about it. If you see a price hike somewhere, don't worry about it. The overall view, it's coming down. Fed's got it beat. They'll claim victory. Everybody's going to pat themselves on the back, say, we did the right job. Now we're here for you. You, the consumer. You, the voter. We have your back. Stock market's rallying. Don't you feel good that you're paying 30 cents less per gallon and now stocks are going back up? They think that we are stupid. They think that they're just going to be able to paint over this nightmare that they have created. They are not. You're smarter than that. You're here. That means that you're not watching Dancing with the Stars, whatever moronic TV show they pump out to keep you busy. So great being here, because what you're looking at right here, right now, real time, is the Treasury market, the tip market, Treasury inflation protected securities saying inflation is here. It's on the rise. We want protection. And the tip market is ripping through the ceiling. After a major, major sell-off, we are up on this week, up 1.5%. We were up last week. Doesn't sound like a big move, but in the tip market, it's a big move. So 3 back-to-back up weeks, and guess what? We called it back here. We drew these lines. We said, you know what? Watch for a breakout. Boom. Off to the races. We're going higher on the tip market. Because why? They just passed another $1 trillion worth of spending package in the Senate. They're gonna pass this in Congress. So another $1 trillion. Balance sheet goes up higher. Debt goes up higher. The dollar. Ukraine screwed us up on this trade. The Russians, I understand why they invaded. The Ukrainian president, the government ought to be in jail, along with many, many Western leaders, for allowing the poor people of Ukraine to get so savaged by a Russian army. But I understand why the Russians invaded. They had many, many years. Declare your neutrality. You're not going to join NATO. No Russian tanks. We knew that Russian tanks were on the border. We could have called them up. Zelensky, hey. Psst. You're going to go out right now. We're going to send you $1 billion. Don't worry about it. We're going to send you $1 billion. You put it in an offshore account. But what you're going to do right now, you're going to do it in about 5 minutes. You're going to put on a suit and tie. You're going to get rid of that stupid khaki outfit you like to wear. You're going to put on a suit and tie, and you're going to go out to a microphone, because you have Russian tanks on your border, and they're going to come over because they're pissed, because they don't want our missiles on their border. And what you're going to say is this: we are neutral. We will not join NATO, and that is it. Russian tanks back off, but we didn't do it. We didn't do it. So what happened? The Europeans thought they were going to win this one. How they think it? They listened. I thought that the World Economic Forum, there were some very intelligent people. They're not that smart, because remember, it's the World Economic Forum that pulls the strings of everything now, and it's the politicians that execute. So you've got Macron over in France. You have this nitwit up in Canada, Trudeau. They are, along with Zuckerberg, they are part of the young leadership group out of the World Economic Forum, out of Davos, the Davos crowd. And those guys set the policy. And these politicians execute on it. So if you want to know why are they changing the definition of a woman? Why are they changing the definition of recession? Why do we have so many riots in the streets with cops being not allowed to enforce the laws, yet people that are protecting themselves, they're going to jail because they defend themselves against thugs? It's all part of the World Economic Forum. Look no further than that guy, Klaus Schwab. That's the guy setting the agenda. So by virtue of the fact that the politicians over in Europe are just so arrogant, they're so arrogant that they didn't think that by boycotting Russian gas and oil, they weren't going to screw themselves. And their economy was going to drop like a rock, forcing the euro to go to parity with the US dollar. And the dollar skyrocketed because of it. Frankly, it hurt my gold trading position a lot. But it looks as though now that the ECB is now raising rates, the dollar is now rolling over. Remember, we broke out. This is a weekly chart. And this is very important, you folks that want me to go over silver and gold. The dollar is the tail that wags the price of gold and silver, but inversely. Dollar goes up, gold and silver go down. Simple as that. And the dollar had a massive rally since the Ukrainian invasion. We broke out on a weekly time frame, even put in a new multi-year high. The problem is we broke down. We failed to hold the breakout last week. This week, retest, failure, rejection, one trading day left to go. But it looks as though we're going to have a rejection and a continuation breakdown on the US dollar. Am I happy to see it? Yes. Why? Because we're long of the gold stocks, we're long of gold, we're long of silver, we're long of the silver stocks. We want these things to go up. The VIX. Now, here's why I pulled back from doing the options trading today. The volatility index is breaking down. Now, we have one trading day left to go here, but on a weekly time frame, we have put in new weekly lower lows. No bueno. We are still, though, building the right side of a massive base. I don't think that we're done building that base. So it'll be interesting to see how we play out tomorrow. But on a weekly time frame, we're looking very weak on the VIX. We are at the low 20s, and we haven't been this low in how long? Since April. And premiums on my option trades have really come in dramatically. So we're going to have to go out in duration and do less earnings trades. We'll manage through. We'll still make money. Let's go to a daily chart. Big break here on the VIX. So for those not familiar, the VIX usually trades inversely of the S&P 500. And it looks like we're going lower. Sorry, folks. The Dow Transports. I always call this my canary in the coal mine for equities. Now, the Dow Transports broke out last week out of a nice sound formation. And we are at current above resistance. Now, this is what we're going to be looking at on a lot of these charts as we look to short the market as a swing trade. Now, let me explain why. Remember what happened here. What this line in the sand here represents. This was a head and shoulders setup. Left shoulder, head, right shoulder, and we broke the neckline. Right now, we're trading above the neckline on a weekly time frame. So it's going to be interesting to see tomorrow whether or not we're able to hold this breakout, because it would be significant. So tomorrow's going to be a very interesting day. I think it's going to be volatile. Volume this week is going to roll in below average. Let's go to the daily chart. Really good price action. Good volume action today. Rock solid. So it looks like we're going to head up to 14.4 on the Dow Transports. RSI strong. Stokes strong. Transports looking solid. The Dow Jones weekly chart, strong up week, up nearly 2%. How's our volume? Light. Going to roll in lighter than last week in all probability. MACD. We've been talking about the MACD, that we expected it to go positive. Now, the thing about the MACD is it's a lagging indicator. So while we're up this week on a positive crossover on the MACD, and believe me, a lot of technicians are trading off this right now, doesn't mean that you're going to continue up higher next week, the week after. Many times you'll just consolidate. S&P 500 weekly chart. Again, we're nearing the breakdown point of a head and shoulders setup. Technically, it's up here at around 425, but 410 was really where the bottom fell out on the S&P. So again, folks, as you're looking at these charts on a weekly time frame, and this is why we do this, if I'm thinking about shorting a stock or buying puts or selling naked calls, basically having a negative position on the market, I want to know where the dead bodies are. Where are the zombies at? And the zombies are those people that bought back here on a new weekly higher high, or they thought that it hit the support level, or they watched some moron on CNBC. He bought his line of crap of why you should buy the market. All of a sudden, the floodgates of hell open up. You drop down like a rock, and all of a sudden, you're looking at your screen, your trading platform, and all it is red, and you think to yourself, "What did I do wrong?" Well, you listen to the morons on TV. You weren't looking at the charts. You got to follow the charts. Now, what this chart is telling me up here are those people that are staring at their trading platforms, waiting for red to go green. They have their finger on the mouse at any second that it goes green. Sell, get me out, get me out. So you got to expect a lot of overhead supply up here. People are going to dump. Daily chart. Looks like we're going to go up higher. Up between 410 and 415, that's where we're going to see resistance on the S&Ps. I think we're heading up higher, up 1.25% today. Volume dropped down versus yesterday. No bueno. We don't like that. Qs. We broke out last week, retest this week. If we hold the gains this week and we close into the highs of the week, we're going up higher next week. Volume, very light. Looking for an overshoot of this resistance level up to 320. That's where a lot of dead bodies are. Watch out for sellers up at that mark. I want to blow through these. I want to get the chart requests. The banks are looking really good. Members, we're probably going to be taking on a position in the banks. I'm not sure about an individual name. We may just go with the FAS. Let's bring it up really quick. I want to see what the naked puts are selling for right now. Basically, what kind of implied volatility we're going to get should we decide to sell naked puts. Nah. IV percentile, only 31%. So for those folks who are wondering, what am I looking at here? I'm looking at current IV percentile. So right now, if you're going to sell premium, there are two ways to make money in selling premium. One, theta decay, also known as time decay. That's a slow way of making money. The other way to make money is IV crush. So if you see an expensive option, like I looked at the RTH the other day. Yeah. So the RTH has current IV percentile greater than 50. You want to look for an IV percentile of greater than 50 because that's an expensive option and you get more premium. And eventually those premiums will revert to the norm. The IV percentile will revert to the norm. So you get theta decay, also known as time decay, and implied volatility crush. You put that money in your pocket. So RTH is interesting. I'm not too interested on the FAS, but we may find names like Goldman Sachs. Nah. Goldman Sachs is really cheap on. This is one of where I may buy the options. They're very, very cheap. The options here. Let's take a look at Goldman Sachs. It wants to go up. You have a lot of overhead supply here. We're right at it. So I wouldn't buy the options here yet. We're right at resistance. So no, I wouldn't buy them. We'll find something to do. The semis, weekly chart. Strong week. We're going up to 240 here. I'm going to speed this up. Volume light and declining sequentially. We do not like that. Remember, Intel, horrible numbers. Will that impact the rest of the sector? Probably not, but you never know. SMH broke out today. Good stuff here. Nice chart. Probably moving up higher on the SMH. LABU, I think it was Trader Isaac. Trader Isaac put this up. Is LABU more of a trading stock now? Seems like Day low dips using RSI have worked, then sell the rip up. Yeah, I mean, I'm a proponent of if you're going to own LABU. A lot of people say you can't use leveraged ETF products as an investment vehicle. That's true. That's true because you have, in essence, you're buying a derivative of a derivative, right? A future on an option, right? It's crazy. So there is time decay involved there. So how do you beat that? If you're looking to own these things for the longer term, how do you beat that time decay? Well, you sell covered calls. Or if you're light and you're not too heavy in the position, you sell naked puts and you generate premium. You could even do a strangle around your core position. So that way you're generating cash flow and you're more than offsetting the time decay. So that's another way to play it if you're interested in doing it that way. What you're dealing with right now on LABU is it's simply consolidating. You have a lot of resistance up at $10 per share. So if you go to a daily chart, you can see we rallied through it. We were rejected. Now people are once bitten, twice shy. So we have support down at, so let's say $8, resistance up at $10. You know, this is one where you could sell some premium on it, generate cash flow. You get good premiums on LABU. But I think that ultimately we're going up higher. Why? The weekly chart is solid. Strong RSI, strong Stokes, price action simply consolidating. Energy. We're moving up higher, folks. So what does that normally mean? Well, we know that energy trades with oil. What's oil doing? It's up 1.82%. Now, this is not a healthy chart. We're at the lower end of a trading range. And if this breaks, we're going significantly lower. How do we do today? Yeah, we were down today. I think we're going to go lower here because we're in recession. Discretionary. Watch discretionary names tomorrow. You have consumer data coming out. Bitcoin up another $1,400 today. Nice. That's going up higher. Emerging markets. I want to talk about this. So I've been talking about this trade for a while now, and that is a macro trade on emerging markets. So what have we been waiting for? It's been beaten up for a while now. What are we waiting for? Well, we've been waiting for it to stop going down, and one other thing. Basically two other things. One, we needed to see a break on yields. Two, we need to see a break on the US dollar. Why? A weakened US dollar is like a tax cut for emerging markets. So what do you want to own when equities are so expensive in the United States? Yields are moving lower. The United States is in recession. And you have a potato for a president. You go buy cheap stocks over in the emerging markets because they're getting a tax cut, because the US dollar is going down, because their debt, they're highly indebted. So that debt is denominated in US dollars. If the dollar pulls back, well, their debt goes down. So they're able to repay, though they're able to take their currency and convert it into US dollars far more easily, if that makes sense. So it's a tax cut on them. So now emerging markets are breaking out in a weekly time frame, dollar breaking down. We're probably going to be putting on a credit spread, a bull credit spread going out probably into early next year on emerging markets, because I think we're going to rip here in the coming weeks. So members, stick around. It's coming up. We've been patient. Now we want to get paid. Gasoline up on the week. Okay, gold. Gold is up nearly 2.5% on the week. We're poised to recapture the 1750 mark. Folks, if we close above, let's say 1760. If we close above 1760, we're going to retest that support level next week. Then we're going to move up higher in the next several weeks. Why? Very simple. The dollar is rolling over. Why is the dollar rolling over? Because we're in recession and the Europeans are now raising rates. We're not the only game in town anymore for an economy, a major economy that is raising rates. That is over. Now you have the ECB in there. Eventually, this Ukrainian issue is going to get resolved. There's not going to be a peace accord between Russia, Ukraine, Russia, the European Union. The Russians don't care about it. They're going to annex the east of Ukraine. They're going to put tanks on that border, and they're going to go home with the rest of their troops out of the rest of Ukraine. Once that's over with, the backstabbers in the EU will, of course, cut a new deal with the Russians to get the pipelines going. Once that's resolved, then you're going to see the dollar take a header, because that's the big problem over in the EU. You're going to see the euro go like this. You're going to see the dollar go like this. Why? We're going to take on another $1 trillion worth of debt sponsored by the United States Congress and financed by the Federal Reserve of the United States, just like we've been saying. So gold looking rock solid. Folks, if you didn't buy the dip, you got to buy the dip here. I'm worried about a filling in the gap here at the 1740 mark. So that's not out of the realm of possibility. Volume, very strong today. As for our gold mining positions on the week, GDXJ, these are the junior miners, we're up 7.5%. Volume is going to roll in about average. Our NUGT trade, we sold naked puts this week. We booked profits on those puts today. Bullish key reversal bar on the week. We're up 4% on the week on this trade. Silver, we're up, oh my God. This is an ultra silver ETF. We're up nearly 16% on the week on this trade. Outside reversal bar, bullish key reversal bar, whatever you want to call it. For those folks new to technical analysis, link below to my 5-part video tutorial on my top 5 favorite candlesticks. Free. Stokes, double bottom setup, hooking up. RSI, hooking up. Good stuff. Love it. The silver miners, we're long of. We're up 9% on the week here. They're going up higher. Gold money, our little gold bank up in Canada, flat on the week. Our uranium trade, up 11% on the week. Cal-Maine Foods, we booked profits here today on this bearish reversal bar. All right, a lot of technical damage done here. We may be involved with it again in the future, but I know I can't hold this position. So we had a profit, we made it real, and we live to play another day. IBM. We bought IBM after earnings. It beat it up on good numbers. So we just bought some. And what are we up on the week? We're up 0.75 percentage point. What else do we have? Oh, one of our bad trades. All right. So, we traded, what did we trade? We do so many earnings trades. On the week, we traded, this is in the members area. We did Microsoft earnings. We did Google earnings, CMG. This is our problem child. We had to roll this from a strangle to a straddle into next week. Big move up higher. We traded Microsoft. We rolled CMG. We traded Qualcomm, made money there. Meta made money there. We closed out those trades. We were looking to do Amazon. I said no. We walked away from it. Thank God we did. All right. So that's the week that was, folks. The week that is. And let's do some chart requests. And we'll call it a night. I can only do a few because I am over. Folks, again, this is brought to you by our friends over at TrendSpider, automated technical analysis. Automate your grunt work, speed up your technical analysis, and improve your accuracy. Use automation. 35% discount code below. Let's begin with the man, the myth, the legend, Trader Isaac. And Trader Isaac is looking for wheat. Okay, so we kind of figured a few weeks ago that wheat was going to take a break and pull back, and it's certainly done that. Monthly Stokes are very weak, and they're getting weaker. We are trading off the lows of the month, though. That's a good thing. Daily chart, weekly chart. So what TrendSpider automatically did here, they created a bot, and what they did is created an automatic VWAP, volume weighted moving average, and it's picking up signs of a consolidation on wheat. We have a bullish reversal bar on the week. On our Stokes below, you can see that we're setting up for a potential double bottom setup. That's bullish stuff. Would I buy here? Yeah, I wouldn't get all in. I would nibble here. I would use a stop right below the lows of the month, but I would not get big. Daily chart. Daily chart. Now here's the value of the automated trend lines, folks. This is how you save time using TrendSpider. Pull up your chart. Oh, I wonder if there's a breakout here. Boom. Click of a button. Automatically, the computer pops up your resistance level. We have broken out. We're going up higher on wheat. We're going up to $8.94 before we see resistance. Wheat is a short-term swing trade. And once we get above $9.14, I think it's going to be game on to the long side for wheat. But remember that monthly chart. It's weak and getting weaker. All right, tell Doc. All right, so I wish I had better news for you here. It's not all bad, but so what this could be, I'm saying it definitely is. There's a couple of ways of looking at this. All right, there's one way to look at it is like this: is we put it in a double bottom at 27.51. Okay. Another way to look at it to the bull side is this: is that we put in a higher low, but then we broke that higher low, and this is why I got a little bit squeamish. But honestly, where we pulled back to on the week was support. So what I would do here, where do we close today? 32.97, 32.90. If for whatever reason, this week or next, we close above 37.79 on a weekly time frame, not on a daily time frame, weekly time frame, because we're looking at a weekly chart. We want to do apples to apples. Then I think that the selling is done. Right now, the shares are under pressure. Did they rally with the market today, or did they buck it? Again, folks, another example, automated trend lines. Boom. Here's your uptrend channel. So what you could do here, if you wanted to buy more or set a stop, I'll share this chart with you. And so if this lower band gets tested, you may want to buy more, or if you're long, you may want to stop out. And there you go. Franklin, have a great night, pal. Last one, PBR. For gay. Of course I have time for you. You remember. What did I type in? I typed in gay. PBR. Okay, monthly chart. Let's go to it first because this is looking interesting. Oh, I like it. I like it. So what we did last month is that we broke support. Now we have a couple of trading days left to go here. Tomorrow is the last trading day of the month. So what I'm going to be looking for next week is an entry point. New keyboard. I can't type. I want to go to seasonality on this one. Let's bring up seasonality. We're going to use monthly. I'm going to go back to 2012 is good. That's 11 years. July, we're up traditionally 72%. All right, we know that that's been validated. Seasonality is good. August, men's and men's. You're up about 50% of the time. So slightly positive on the month of August. It gets better in September. The same in October. November, you do not want to be in the stock. So look to bail in October. Look to re-enter in November, because that's the worst month out of the year. I think that PBR is probably heading higher. Let's go to the weekly chart now. Nice breakout on the week. Again, what we're looking for here is A, do we close out the week above this resistance level? If no, then we avoid. If we do close above this resistance level on the week, do we retest on the month next month, which is next week, and does it hold? I'm willing to take the bet on the retest that yes, it will hold. I will buy there. What will I do immediately thereafter? Set a stop right below the monthly lower band of support. Daily view. Nice daily chart. We're going up higher here tomorrow. I like the setup. PBR is looking good on a daily, monthly, weekly time frame. Looking good. Brazil should benefit from, yes, exactly right. Yeah, remember watch oil, okay? Oil was going up when the dollar was going up dramatically. Now that the dollar is pulling back, watch how quickly oil moves back up higher. Why? Oil's priced in US dollars, petrodollar. Folks, thanks for being here. Hit the smash. Please hit the like, subscribe, comment buttons. If you watch this on the replay, use a comment below. Enter your symbol for me to go over on Sunday night futures live. Give me an indication of whether or not you're bullish, bearish, and why. We'll talk about it on Sunday night, folks. Have an awesome, profitable trading day tomorrow and a crazy weekend. Relax, enjoy it. Talk to you soon. Be well.